Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about the IT sector, an analysis of the IT sector and which stocks to really look at. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about the IT sector and the stocks in here, there's a small request to kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months, so that's a 16% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now about the sector, one of the best sectors for the past decade and has been performing extremely well over the last 2 decades even, and some small firms have become extremely big and multi-baggers over this period. Tata Elxsi is one of the examples. Over the last 5-6 years have become extremely huge. Pandemic has helped business gain more momentum, and there has been more business coming for this sector with work from home and many of the industries getting automation, and there is a greater need for IT, and there has been an understanding with all industries that IT is the way to go, and mixing technology with their work is about time they need to do that. So there are a number of mid cap stocks looking good at the moment, and the companies are having more, you can say, business and an order book to work with over the next 4-5 years. Return ratios have improved significantly from last 3-4 years, and numbers are also gaining momentum. In terms of prospects, I believe the sector has a number of new segments emerging. You can say artificial intelligence, machine learning, robotics, electric vehicles, hydrogen fuel play are some rising sectors. Plus green energy is something that people are looking at, and in all these aspects there's a need for IT, because if you look at vehicles being run on green energy, or you can say factories run on green energy, they require some kind of automation here and there. So everywhere there's a need for information technology. Demand from the west is also surging, so demand from US and Europe is only increasing as we are seeing, and only the hindrance has been the geopolitical situations. If that go away, there will be more, you can say, business coming up. Specific companies are mastering art in particular area. We have seen that Tata Elxsi is doing extremely well. Before, it used to do well in the animation space, and now it has been doing extremely well in the electric vehicle space, providing the dashboard, etc. KPIT has been doing well in the hydrogen fuel and EV segment, and there are other companies that are making tailor-made programs for a particular segment of information technology here and there. So that gives us strong opportunities to investors to invest into these companies. We'll talk about all these smaller companies and larger companies later on in the presentation. Plus dollar strength is another tailwind, and currently it looks like dollar could head towards 77 78 rupees, and that would be another, you can say, feather in the cap for the IT industries to make money out of, because the overall revenue will swell up. In terms of top picks in this segment, TCS is one of the best picks to take. Even now at 36,000-37,000, I think 4,500 is something that we can look at over the next 1 year's time frame. Tech Mahindra has given negative returns for the past 2-3 months, has been declining and has come to very attractive levels. Tata Elxsi has run up a lot, but the business seems like it should continue to grow going forward, and probably any dips towards 7,000, 6,500 a very good opportunity to buy. Larsen & Toubro, Infotech, LTTS and Mindtree are other picks in this segment, but all these three, Larsen & Toubro, Infotech to an extent at these levels look very good. LTTS and Mindtree on a slight 5 to 7% decline can be looked at into buying from a 5 to 6 years point of view. So some of the dark horses in here are the smaller companies. So around 9,000 crore market cap, 8,500 crores market cap comes a Mastech. Very attractive valuations, although business is pretty simple and they are doing the simple things right here and getting more orders. There are many deals that are pending and that could come through. So Mastech around 3,000, 3,100 is a clear buy. KPIT, the kind of mode of business with the EV and everything around it, I think is a big buy at 550, 570 currently around those levels. It looks extremely good to have a growth rate of around 40% CAGR going forward, and that's why the numbers could continue, or the PE could continue to be strong. In fact, over the last couple of years they have delivered 70% growth. So 40 to 50% profit growth could be possible here, and that's why KPIT is trading at such high valuations. Birlasoft with a strong order book coming up and the price having corrected, I think around 430, 440 is a big buy. Birlasoft. So these three are the best prospects for the long run in terms of the mid cap stocks. Automation and EV theme to pick up pace going forward. I'm pretty sure that EV would be big by 2030, and I think KPIT is something to be really looked at. Tata Elxsi has already done so well, so KPIT may end up doing even better going forward in the next 5 to 7 years. So in terms of my strategy, I would believe that what you can do is pick a basket of stocks, couple of large caps, couple of small caps, or at least 3 4 stocks if you want to build a portfolio around here. I think TCS should be part of that portfolio, but in mid caps it's very hard to say that which one could become big and which one would be a dud in the next 8 years, and that's why I'm saying you pick a basket of these stocks and do not put everything in one go. If you have 1 lakh rupees, put in 20,000 now, then 30,000 next time around, and likewise divide your investments and take positions in staggered manner on bad days, as I mentioned. Not quite like, okay, I bought on a Wednesday, then I'll buy again on a Wednesday, not like that, but take positions slowly, gradually, either when the stock performs extremely well and goes up, or it has dipped at least 10 to 15% from the last buy price that you have done. Probably you can do that and keep on accumulating the stock, and hold over the 3 to 5 year time frame. If you can hold over 5 6 years, these companies should give you extremely good returns when you look back in terms of CAGR. They might not do well immediately, so that's where you have to show patience, and that's where I say that you put in enough money, so much that you're not worried about for the next 4 5 years, and keep stop losses according to your risk appetite on your investments. So this was my video on you can say the IT sector overall. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.